Welcome to the latest GOLDINVEST interview. We're talking to Aurcana Silver today. Aurcana is going to be the next silver producer from Canada, although the asset is in Colorado. The company took the last big hurdle on that path to production late last year. And today we're going to talk to CEO Kevin Drover to hear more about these exciting developments. Welcome, Kevin. Good talking to you.
Hey, good to see you, Bjorn.
Kevin, as the GOLDINVEST audience is still new to Aurcana, please give us an idea or a short summary of your primary asset, your mine in Colorado.
Well, we have the Revenue Virginius mine in Colorado. It's very near production. We're looking at pushing the button in July on that. Currently, it's primary silver. It does have base metal, some gold credits. And as I said, we're very, very near production right now. We're doing pre-production development, doing some work on the upgrading the mill, and expect to be in production, as I said, in July of this year and positive cash flow in September.
Okay, well, that's really close to production, let's say. You reached the milestone I was talking about was that you closed a credit facility of, I think, $28 million. Funding which was funding you until the restart of the mine. Can you give us a bit more detail on what it means to ramp up the mine? What kind of work still has to be done?
Well, it's not very much. We're fully permitted for production. We've got about half our workforce employed right now. We have close to 90 people on the site. We do have some contractors. Because of the grade of the lead that the mill is going to see, the mill was originally designed for about 3% lead. We need to double that capacity. So we're upgrading our flotation cells so that we can put higher grade through the mill. So we have a contractor doing that. We have a couple of buildings on the surface that we need to put in place for staging materials for underground and reagent mixing and things of that nature. So not big works or anything, but of course we're in the middle of the winter now and that takes a little bit longer. We just recently completed our passive water treatment system. So that's all up and running now and being filled. But the primary focus right now is really to get the pre-production underground development completed. We've got 3 raises we need to do in order to get up in the system to access our higher grade material. And that's the focus, the real focus that we've got at this point in time. And we're trying to meet that schedule of being able to produce ore from those upper areas of the mine in July of this year so we can feed the mill.
Okay, well, certainly sounds very good and very exciting stuff for the company. Well, I saw that you just took in or closed an equity financing to the tune of $33.5 million, something like that. Why did you take in so many additional funds if the credit facility was supposed to tide you over to the restart of revenue?
Well, the credit facility was certainly insufficient funds for us to get to production, but what it didn't do was it didn't give us a lot of contingency. And right now we're in the world of COVID, and we don't know what effect that may have on the schedule that we've got. And losing schedule is a costly proposition. So we thought it prudent that's one of the reasons that we thought that we'd go out to the market and get a little bit more contingency funding. But in addition to that, we have some opportunities that I've talked about over the last couple of years nearby in the Revenue Virginius mine area locally. There's a couple of very good prospects for us, we believe, that picking them up would be good for the company and for our shareholders. So we wanted a little bit of contingency funding in the case we were able to do a deal with a couple of these. And there's 4 primary ones, and they're in our presentation. The Ken Bird mine, the Ruby Trust mine, the Orvis claims, and we've already picked up the Bluegrass claim was the 4th one. So those are the ones that we are very, very interested. The Ken Bird mine, for instance, as 2 permitted tailings ponds, along with a large amount of infrastructure, underground infrastructure that would be useful to us, as well as it was a 1.5 million ounce producer of gold. So it's got good exploration upside. And in addition to that, don't forget we have the Shafter project in Texas. Yes. And given the current market, for silver, things are looking rather bright. So we thought that it might be an appropriate thing for us to accelerate the technical work that we need to do at Shafter to bring it closer to, to the present, to getting it into production. Now, closer means, 18 to 24 months out. We still have to do the technical work. Mainly, we need to do an infill drill program and do a feasibility study. So we needed some extra funding to do that. So put it all together, we were really, really oversubscribed.
Yeah,
we turned down a huge amount of dollars beyond the 33 million. So there's a lot of money there. People, I think, view Aurcana as a very up and coming, us working toward being a midterm producer. So I think the funds will be used very, very well, and I think we'll see that will enhance shareholder value going forward.
Okay, thank you. Good to know those plans. So let's talk a bit about your expectations for the future at the revenue mine. Please give our audience an idea of what the revenue will earn for Aurcana, let's say, the first 5 years of production. I mean, there's the numbers you put in your feasibility, and then there's the current silver, precious metals price levels. Right. Those should have a positive impact, right?
Yeah, no, absolutely. Very positive one. Well, if you look at the first 5 years, as per our feasibility study, we say 3.1 million average ounces per year. And that's at 270 tons per day. The mill is actually designed for that's a 500 tons a day. So we have organic opportunity, once we get settled in at our 270 tons a day, to be able to bring that tonnage up closer to the 500. We're not going to do that straight out of the chute. We're going to get ourselves, our productivity, our metallurgy, our costs in place. But bringing the mill up to full capacity really means a blending program that we need to put in place in the mine. Because what really limits the mill throughput is the lead grade, not the silver grade or the zinc, it's the lead grade. So we're doubling the capacity of the flotation circuit because the lead grade is going to be higher. But we'll still have, because we have stopes that run 15% lead, and that's too much to put into the mill. So we need to blend that down. So rather than trying to do that in the feasibility study, what we thought we'd do is we do that in the real world. You get 4 or 5 stopes developed. Okay, we draw a bit from here, from there, from this one. And, we blend ourselves down to that 7-8%. And then we're able to bring that tonnage up to the 400 or 500. We expect that we will bring that tonnage up in the beginning, in the second year, that we'll start raising that tonnage up. Now, in the first 2 years, as per the feasibility study, our actual production rate wasn't 3.1. It's actually 4.5 million, but you don't see that in the aggregate numbers. So if you look at 4.5 million ounces in the first 2 years, and then you look at we used $25 silver when we did the calculation, and we're going to be in cash flow in excess of $60 million a year for those first couple of years. And by the second year, what we're saying basically is that we're going to have our tonnage up. So we're probably, as long as the price stays above 25, we should be seeing that $60 million a year going forward. So looks pretty bright from where we sit right now.
Okay, so that certainly sounds interesting. And your reserves and resources, are you going to grow those alongside? Are you exploring at the same time?
Absolutely, we'll have to. As you know, we're currently set up for 270 tons a day. If we double that, then we cut our mine life from 7 years down to 3.5. So we have to get going right out of the chute. But we expect that we're going to add close to 2 years of reserves even before we get into production. Right now, we're developing, and I don't know if you recall or not, but on the 1500 level, from the 1500 to the 1200 level, where we're going up vertically, is inferred resources. It's not in our mine plan right now, but we expect that's going to convert. So that'll give us a couple of years of reserves, we think. We have to do the work first, but we're already at that level right now. So we're very close to being able to probably generate some assays and sampling on that level that we'll be able to share with our shareholders in the coming months, kind of thing. But and then we have to get going on our exploration program. We know exactly what we want to do. Our first order of business, get ourselves into production. That's job number one, and we do not want to get lose focus on that aspect of it. But very quickly thereafter, we will be exploring.
Okay, good to hear. Thank you. So, I mean, you basically said it all in the interview already, but please give us a summary of why at this moment in time would be a good idea for investors to pick up a slice of Aurcana. Well,
Aurcana is one of the very, very few companies right now. I mean, we're in the United States, stable jurisdiction. We're in a bull silver market. I think it's got nowhere to go but up. It's a near production. We're fully permanent. I mean, the risk in owning this company is very, very limited. The biggest risk that I see is really, COVID. What could it do to us? And that's, again, one of the reasons I wanted to raise some extra money. Is what we don't want to get ourselves in is a situation where you're almost in production and then you don't have enough money. You've got to go back to the market. And that's the gotcha moment, right? That's going to be very expensive money, and it won't be good for anybody. So yeah, I think near-term production, silver bull market, very high grade, one of the highest grade mines in the world is what we are. So and great exploration potential.
Okay, well, thank you very much. Thank you for taking the time to talk to us, and we'll be, of course, watching how you execute on all your plans. Thank you very much.
Thank you, Bjorn. Bye-bye. Take care.